Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And it's Saturday, March 11th, 2023. I hope your weekend's going well. I know a number of people are quite scared right now, and with good reason. Because on Friday, Silicon Valley Bank was closed down by the California Department of Financial Protection and Innovation. This is the second bank to be shut down recently. Now, the reason for the closure was said by the department to be a lack of adequate liquidity and insolvency. The FDIC has also confirmed that it has taken receivership of the bank. They reported that Silicon Valley Bank had around $209 billion in total assets and approximately $175.4 billion in total deposits as of the end of the year 2022. The bank's deposits are FDIC insured, but only within limits. This announcement came after Silvergate voluntarily liquidated earlier this week. Now, in their case, Silvergate is assuring its customers that their deposits will be refunded. Now, not really a crypto bank like Silvergate, the tech-focused Silicon Valley Bank has served a number of crypto-related clients such as hedge funds and venture capital firms. This includes clients such as Blockchain Capital, Castle Island Ventures, Dragonfly, and Pantera. In addition to disrupting the crypto markets, the news caused shares of several West Coast banks to decline. This includes First Republic Bank and Western Alliance Bancorp, which went down 15 and 25% respectively. Also, Signature Bank, known to be crypto-friendly, has experienced a loss of 13% in its stock price. This was enough to shift the momentum of the stock market from a small increase to a small decrease. The S&P 500 dropped by 0.3%. Bitcoin has remained relatively stable, hovering slightly above $20,000. One customer of SVP in the UK informed Reuters that the bank's dashboard typically displays account balances and money transfers. Reportedly, that dashboard was unavailable. SVB's bankruptcy involved $211 billion in assets. It's one of the biggest bank fails in history, second only to Washington Mutual Bank. On Friday, the FDIC announced in a press release that all depositors with insurance coverage will have full access to their insured deposits by Monday morning. Meanwhile, uninsured depositors will receive an advanced dividend in the coming week, with the possibility of receiving more as the FDIC sells off the assets. U.S. lawmakers held discussions with the Federal Reserve and the Federal Deposit Insurance Corporation to discuss the failure of Silicon Valley Bank. Representative Maxine Waters met with officials from the two federal bank regulators as well as the Treasury Department later in the day. This was after the California Department of Financial Protection and Innovation took control of the bank and transferred it to the FDIC. Reportedly, these were bipartisan meetings with regulators. In a statement, Waters said that she was alarmed by the bank's failure. She says that she's closely monitoring the situation. She says that she's working with regulators to understand the latest developments. Waters said that she remains confident in America's financial markets and regulators' ability to protect consumers and investors. Numerous legislators in California tweeted that they were monitoring the situation as well. A significant issue is whether depositors would get any of their money back. And by that I mean beyond the $250,000 per account limit that the FDIC guarantees. Now, the FDIC has stated that it will give uninsured depositors an early payment and a certificate for receivership. Businesses that used SVB as their bank might have trouble paying their employees, and transactions initiated just before the bank's failure could be unsuccessful. They emphasize that it's crucial that they insure all deposits over $250,000 because that's the promise. Now, banks run on confidence. If people lose trust in the safety of their deposits over that amount, that could lead to significant problems for the banking industry. Representative Ro Khanna's district encompasses Santa Clara being the hometown of the bank. Now, he shared on Twitter that he had a conversation with the White House and the Treasury Department regarding the bank. According to a statement released by the Treasury Department, Janet Yellen has met with bank regulators from the Federal Reserve, the FDIC, and the Office of the Comptroller of the Currency. Yellen reportedly expressed her confidence in the regulator's ability to respond appropriately and highlighted the banking system's resilience. Additionally, the statement noted that the regulators have the necessary tools to address any potential issues. BlockFi has $227 million in uninsured funds in SVB. According to the U.S. trustee responsible for BlockFi's Chapter 11 bankruptcy case, the $227 million is held in a money market mutual fund, and it is not insured by the FDIC. This means that the funds are not going to be covered by the standard deposit insurance amount of $250,000 per depositor per insured bank. The bank's balance summary statement for the account confirms that the money market mutual funds investments are not considered a deposit, so they're not FDIC insured. In fact, they're not guaranteed by the bank or any federal government agency. Now, Circle recently confirmed that $3.3 billion of its $40 billion of USDC reserves at the bank have not been processed yet. This delay has caused concerns about USDC. That's because Circle's latest audit revealed that about 20% of its reserves was held in several financial institutions, including Silvergate and SVB. That amount is about $8.6 billion. On March 10th, Circle took to Twitter to offer a bit of transparency on the matter. They disclosed that, despite attempting to move funds on Thursday, the transactions had not yet been processed, and as a result, approximately $3.3 billion out of the total USDC reserves are still located at SVB. Circle has recently voiced its support for the continuation of the bank, along with other clients and depositors. According to the company, the preservation of the bank is crucial for the U.S. economy. Now, Circle took to Twitter to affirm its commitment to complying with the regulations set forth by the state and federal authorities. Expanding on the statement made by Circle, the company's chief strategy officer and head of global policy emphasized that they're working to safeguard USDC from a catastrophic event in the American banking system. He urged the FDIC to come up with a rescue plan in collaboration with the bank. Failure to do so would have far-reaching consequences for businesses, banks, and entrepreneurs. Now, a representative for Circle emphasized that Silicon Valley Bank is only one of 6 banks that they use to manage around 25% of their USDC reserves. They stated that Circle and USDC are still operating normally while waiting for more information about how the FDIC receivership of that bank will impact its depositors. It's worth noting that prior to the announcement, USDC was trading at 98 cents apiece, but the price dropped significantly to 93 cents. After the bank was closed by California's watchdog, it became the first FDIC-insured bank to fail in 2023. SVB provided financial services to numerous crypto-focused venture firms such as Andreessen Horowitz and Sequoia. Further complicating the situation around USDC, Coinbase released a statement indicating that they will temporarily halt USDC to USD conversions over the weekend due to bank closures. The company explained that these conversions depend on the availability of USD transfers from banks, which are typically only available during regular banking hours. The conversion service will resume once banks reopen on Monday. On Saturday, Circle Internet Financial made a promise that it will use its own resources and even seek external help if needed to compensate for any shortage in funds that back USDC. Circle stated that it made an effort to transfer its assets prior to the collapse of SVB. The deal could be finalized when the banks open on Monday. However, Circle has also mentioned the possibility that the bank may not fully recover, and even if it does, it's going to take some time. This is because the FDIC may substitute IOUs or receivership certificates as well as advanced dividends to deposit holders. The current situation in the cryptocurrency industry has presented some challenges for centralized companies. One notable example is Silvergate's decision to discontinue their 24-hour banking services, leaving many crypto companies struggling to adapt. Binance also had to make adjustments by temporarily halting the automatic conversion of USDC to BUSD due to market conditions. This move was in response to the high influx of transactions and the burden that it placed on the company's resources. These developments highlight the need for flexibility and adaptability in crypto. The company stated that it's a typical precautionary measure for risk management purposes which they are taking while keeping a close eye on the situation. After the bank collapsed, USDC stablecoin lost its peg to the dollar. It dropped to 88 cents apiece. Investors started to sell their USDC and move their money to other stablecoins or back to fiat currency. USDC's value dropped by 15% in the last 24 hours. $2.34 billion worth of USDC was redeemed for dollars. This has caused chaos across centralized and decentralized exchanges alike. And while USDC did lose its peg, Tether did too. However, Tether moved in the opposite direction, briefly spiking up to $1.06 on Kraken. Ethereum transaction fees 10x'd as USDC holders rushed for the exit. Other stablecoins like Frax and DAI are also partly backed by USDC. They too depegged to similar levels. As a fully reserved stablecoin, USDC is 100% backed by cash and short-dated US treasuries. That's supposed to make it redeemable one-to-one. Supposed to. At the time of writing, USDC was trading at 91 cents. DAI lost 7.4% of its value. According to data from June of 2022, the supply of DAI worth $6.78 billion. It was backed by $8.52 billion worth of cryptocurrencies. Now, among the different cryptocurrencies used as collateral for DAI, USDC held the highest percentage at 51.87%. That had a total value of $4.42 billion. Ether and Pax Dollar were also prominent, with values of $0.66 billion and $0.61 billion respectively. As a result, the value of DAI temporarily depegged. It dropped to 89 cents before bouncing back to around 91 cents apiece. Tron's stablecoin and Frax's fractional algorithmic stablecoin both suffered losses due to unfavorable market sentiments. USDT was trading at 92 cents as a result of the USDC sell-off. Frax dipped even lower to 88 cents apiece. And while a number of people tried to cash out and preserve their capital, some investors were not able to recover their investments amidst the chaos. In an attempt to minimize their losses, investors sold their USDC tokens for other stablecoins, like Tether. Unfortunately, a transaction shared by a Twitter user named Bowtied Pickle shows that one USDC investor paid over $2 million to receive only 5 cents worth of Tether. Apparently, they kept their assets in a liquidity pool, and instead of selling their tokens for Tether and incurring a 6% loss, they opted for a questionable method. You see, the problem was they were in a hurry, and they forgot to set their slippage. That oversight led to a bot making a profit of over $2 million after paying just $45 in gas fees. Senators Elizabeth Warren and Ron Wyden have requested that the Public Company Accounting Oversight Board take action against auditors for their involvement in unsuccessful cryptocurrency projects. The board has declared that proof of reserves is not equal to audits conducted under auditing standards. Now, crypto exchanges have been using proof of reserves to verify user funds availability, but Warren called for more rigorous oversight to ensure that consumers are not left bearing the brunt of unscrupulous crypto firms' collapse. Now, Warren's comment received a response from R.A. Paul. Paul is the founder of Block Tower Capital. Block Tower Capital is an investment company focused on the blockchain. Paul pointed out how SVB's collapse has caused much financial ruin for crypto-related businesses. He accused the bank of being more concerned with expanding its power than supporting people. According to Paul, this has led to significant losses for both regular and professional investors who rely on the bank. Elon Musk shared a meme. It's that sweating guy choosing which button to push. And it highlights the difficult position that investors find themselves in when deciding whether to trust traditional banks or cryptocurrency businesses with their money. Now, one investor confronted Warren. They demanded an apology for initiating the Silvergate bank run that caused widespread chaos amongst the nation banks. In addition to what Circle stated earlier, the company's chief strategy officer and head of global policy underscored the fact that Circle is taking measures to prevent USDC from a catastrophic failure in the American banking system. He also urged the Federal Deposit Insurance Corporation to come up with a rescue plan. And finally, let's close out some news from the investment front. Jim Cramer, who hosts Mad Money, often receives criticism on social media for suggesting investments that end up being unprofitable. Recently, he used the failure at Silicon Valley Bank as an example. On February 8th, Kramer talked about the Silicon Valley Bank and believed it was a good value despite the stock going up 40% year to date. On March 8th, the bank publicly announced that it sold off securities at a loss and planned to sell off over $2 billion in new shares to correct its balance sheet. This news caused widespread panic among depositors, leading them to hastily withdraw their funds from the bank. Now, Kramer had previously recommended the now affected shares as an affordable investment option just 1 month ago. On Thursday, the shares suffered another blow and were eventually suspended on Friday. And as we know, the Federal Deposit Insurance Corporation intervened during the trading day and took control of the bank. Despite being a longtime on air personality, Kramer has given some investment advice that has caused controversy, especially in regards to crypto. His recommendations have varied from encouraging people to invest in Bitcoin and Ethereum to advising them to sell and stay away from crypto market altogether. This has resulted in some investors in making opposite trades and others questioning the direction of the market. The failure of Silicon Valley Bank has caused many people to suffer losses, and the full extent of the situation is still unclear. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe. Leave a rating or review. And in the meantime, we'll see you tomorrow night.